So I'm here with David Moberly with Academy, and we're going to talk about jumbos. So tell me real quick, David, just what are the qualifications for a jumbo? What are the requirements? Walk me through it just a little bit.
Sure. So first thing to know with jumbos is they are investor specific. Where Fannie Mae and Freddie Mac have rules that apply to everyone, different jumbo investors have different jumbo rules. So I'm going to kind of give you the gist of what most like. Most are going to want to see a credit score of 720 plus. 10% down is generally the minimum, although 20% down is going to be better.
And what's the rate difference between 10 and 20 usually?
Typically depends on the investor, but maybe
Okay.
1/8 of a percent.
Okay.
Every jumbo investor is going to post different rates. So what we like is we want every jumbo investor available for pricing, because then we can pick the best rate. So the less of the qualifications we meet, the less options we'll have. So the other big example that some investors are going to be fine with 3 months of reserves, and some are going to want 6 months of reserves. And a reserve is basically 1 month's worth of the mortgage payment in the bank after closing. So if you have 6 months of reserves, 740 credit, and 20% down, and your debt to income ratio is below 35%, pretty much every jumbo investor is going to be available to. We'll get you the best rate. As we start chinking away from those different options, we'll probably still have a jumbo option, but we may be down to just one jumbo investor whose rate we don't love, and we go, well, this is our only jumbo investor that's available.
And how much fluctuation is there that you've seen, like between the different investors? I mean,
it can
as
be a
far as the
lot.
rate? Can it be
Yeah,
like
I mean, it can be from 1/4% above market rate to a full percent above market
Wow.
rate. So it can be a pretty big impact. And when you're talking $1 million loan, 1 or 2 points to buy that loan down, that's a chunk of change.
Yeah.
So
And a jumbo loan is above 538.
548,250 is the 2021 conforming limit. So if we go above 548,250, it's no longer a loan that Fannie Mae or Freddie Mac will buy, and that creates where we're looking at either a jumbo investor or potentially a conforming investor with a HELOC second loan.
And walk us through what that would look like.
Yeah, so say you're buying a house for $800 and you want to put 20% down. So your loan now is $640. And for whatever reason, we don't like the jumbo investor guidelines. What we would do is maybe a first loan of $548,250 with a second loan for the $91,750 or whatever's left over to get us that $640 total loan amount. We're now back to conforming loan limits, so Fannie and Freddie guidelines, which are going to be generally a little more friendly than jumbo investor guidelines. If you're just buying a primary residence, or if you're buying your only investment, typically reserves are only required through Fannie or Freddie Mac on investment properties that are not either the subject property that you're buying or like a primary residence.
Yeah, okay, that makes sense. Cool. Super helpful.
All right.
That's if you're looking for a jumbo loan, so hit him up. Thanks.
Yeah.